Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trade setup as well as the market strategies you need to follow. So this is another important session that's beckons for the Nifty, as it's not only the weekly options expiry, but there are also a slew of news updates, earnings, reactions to deal with. And of course, the Nifty has entered this session on the back of a strong show on Wednesday, as both HDFC Bank and ICICI Bank also hit their record high levels, taking the index higher in the process as well. Even Reliance Industries also saw a rebound from the lower levels that it was hitting after the earnings. Now, Infosys, of course, will be the major earnings reaction today that the markets will be seeing. Already, we have seen the US listed entity already ending about 1% higher in the overnight US trading session as well. So, we'll see whether that carries on too. Of course, apart from these earnings reactions will come in from Dr. Reddys, Tata Consumer Products, Coforge, Persistent Systems, Bajaj Housing Finance, and among today's results, Bajaj Finance, Nestle, IEX, Karur Vysya Bank, SBI Life and Motilal Oswal will be important numbers that the markets will be tracking for the day today as well. What happened overnight? Well, in the US markets, we've actually seen largely they ended higher, although mixed note. But Donald Trump has said that, and I will quote, he says, "I will only lower tariffs if a country agrees to open its market, if not, much higher tariffs." That's what he has said, quote unquote. Now, remember, he's also been cheering the deal with the Japan. Markets across Asia also have been celebrating that, and we've been also seeing that, the kind of moves that we are seeing on the Nikkei topics, they're continuing at record high levels too. And that is something that will trickle into the Asian sentiments. For the GIFT Nifty today, there is an uptick of a start that could happen 0.1% higher, 25,274. So that's something that we are looking at as well. Let's welcome our guest on board. Mr. Devin Choksi joins in, MD of DR Choksi FinServ, and thank you so much for joining in, sir. It's always a pleasure to get you with us. We'll start off with the earnings overview because that's the key micro data at hand. And again, this week, we are focusing a whole lot on the IT numbers yet again. Infosys, of course, will be reporting its numbers today, after the numbers today. And of course, we were also seeing Coforge, Persistent Systems, within the mid-cap basket also report its numbers, and the reactions will be seen today as well. So far, what's your assessment since a large part of the IT numbers are already out? What are your top 2 or 3 key takeaways, sir?
Yeah, good morning, Sakshi. Well, I haven't been able to see the across the board all the results in the mid-tier ITs, but I think whatever the frontline IT companies' results and some of the mid-tier IT companies' results that I have studied, I believe that I think the worst probably seems to be behind them. None of them are complaining about I think the past issues anymore now. In fact, every management commentary is talking about only one single thing: how soon, how fast. I think the order inflows would start coming in, and should they become regular and larger, then probably I think we are seeing relatively better times going forward. From a single-digit growth to a double-digit growth is distinctly possible in the first level of I think change that we will be experiencing. On the other side, the companies are also facing the challenges in form of revamping their business model to a newer segment, which is I think incorporating the AI part of the platform-related solutions, which they want to possibly provide to all their customer segments, whichever their domain in which they are operating. And that's where I guess I think the transition is happening. So we are very interestingly watching this transition and then see how exactly I think they win with some of the larger orders. But yes, I think the for investors, in one line, if I have to summarize, for investors, I think to see the larger opportunity in IT companies, my hunch is that they will have to stay with some of the mid-tier IT companies which are operating in engineering and R&D space. Over there, I think their B2B portfolios, I think, are working far better compared to their frontline peers. So I think we would selectively look at some of the mid-tier IT companies in the entire basket of IT stocks in the markets.
So, Mr. Choksi, if I have to ask you, I think one of the rare companies that have raised their guidance, for FY26 is Infosys among the large cap peers. Although there is some, sense of discomfort on the attrition levels, but overall, within this macro uncertain environment, what would your pecking order be, sir, in terms of the stocks that have reported their numbers?
Infosys or any other IT companies, if they are facing attritions, according to me, it's a blessing in disguise. Because I think the talent which is required to be skilled again, I think in the world of AI, and that's where probably I think you do not want to keep that talent which is not AI suitable talent. So if they are leaving for a reason, for a purpose. In fact, I think this particular attrition is also suggesting that the companies are agile and they are creating, I think, a significant amount of emphasis on the profitability in the business. So I'm not completely worried. As far as I think putting the number one, two, three in this particular game, I don't think that it's an easy job currently because you are not seeing the sustainability of the revenue. If you have won some orders in the current quarter, next quarter, suppose if you cannot, then probably I think market won't be very kind to keep you in the portfolio. So that's where I think one will have to be going, I think, a little bit slow and moderate in selecting the IT stocks. As of now, Infosys definitely has given the better expectations along with Tech Mahindra.
Okay, got that. Let's shift focus to the banking names. The other key aspect that has been, playing a key role in propping up the markets above 21, 25, 200 and 25 to, 219 right now. It's been HDFC Bank and ICICI Bank right after the earnings. These two companies have carried the weight and pushed the Nifty and the Nifty Bank higher as well. What's your own assessment, sir? On the one hand, we have these large cap private sector banks that came out with the earnings yesterday. We did see record high levels for both of these players as well. On the other hand, within the PSU banks, we have an SBI QIP that's gone underway. What exactly is your sense of what's happening here in the banking space? Any opportunities for investors to look at afresh as well?
Extremely competitive place along with I think full of opportunity, which means that I think there is going to be a pressure on margin for most of these banks on the NIM side. And at the same time, I think the growth will come from the organic growth opportunity that you are seeing in the environment. The corporate sector, MSME, SME included, they are experiencing some of the best times, according to me, in form of I think higher amount of growth. At the same time, I think the banks are facing significantly large amount of challenge because the capital market is on a strongest possible side at this point of time. And for funding the projects, the corporates are definitely relying on diluting the equity, monetizing the equity through the higher price and the valuation that they face in the capital market. And in a way, I think they are buying or relying less on the debt fund to an extent which earlier days or earlier years indicates. I think they would have squarely relied on the debt fund, which is not a situation now. So in that kind of a situation, the pressure would be there. Opportunity would of course be there, but the pressure would also be there. One silver lining here would be the consumer financing business. Consumer financing business portfolio of likes of ICICI or even for that matter other NBFCs, they are likely to see relatively I think smarter growth because the consumer is going to be a big time spender in this environment.
Okay. One big number that we could not take your view on was Reliance Industries also, sir. So we'd just like to understand from you, how have you assessed the earnings of Reliance? Despite a record high profit, the stock markets, were definitely seeing some reaction on the negative side. Of course, the stock has been in momentum ahead of the earnings, that we cannot forget. But on the other side, the some of the concerns on, say, the retail segment momentum slowing down, or maybe the O2C segment also not performing in tandem. How do you look at those concerns? And what could be the next big trigger for catapulting the stock higher into a bigger trajectory, sir?
So I'll address one point at a time. I
Sure.
believe that I think the head of results, I think the expectation was built largely because of the fact that Geo platform announcement would come for listing. Now that announcement has not come, and quite possible that in the AGM, I think some clarity may emerge in this particular area of activity. So the market has given up, and that is where I think the fall can be explained. Second reason for the fall in the market can be explained as the imposition of significantly large amount of tariff on Russian crude, and as a result of which any country or any companies within those countries exporting the Russian derivatives based on the Russian crude, they would be probably subject to the tariffs as well, and that is a concern on which I think the uh, crude oil processing companies, the refining companies like Reliance have actually, I think, met with the kind of a pressure and selling in the market, which may be a temporary. I don't think that I think it is a permanent in nature. So these are the two things. As far as I think the new segment of business is concerned, the retail segment, in my viewpoint, I think has maximum to offer current year, largely because of the fact that I think the individuals are getting more money in their hand due to the tax saving, and that is to result into higher amount of spending. Along with that, I think you are going to have substantially large amount of credit availability at a lower cost of funds. So that could possibly give lift to some of the marquee segments like electronics in the retail space, which I believe I think is going to give the maximum amount of thrust to the retail business. And of course, I think the geo platform business has been, I think, reporting 20% plus kind of a earning growth in the EBITDA at the EBITDA level, which they are promising to remain at the higher level in 20 to 24%. So I guess I think they could be somewhere around 75,000, 80,000 crore EBITDA making company fast forward next 12 months. So in my viewpoint, I think all the business streams are actually running very well as far as they are concerned. And I think some disappointment, as I explained in the earlier part of the communication, I guess I think that's the reason for which the stock price is down. But that's an opportunity. Those who invest for long term, I think any fall in the stock price always remains an opportunity.
Any dip in the stock is an opportunity. 25,236 in the pre-open trade. We'll continue to focus on when the markets settle down in this space. But let's also, Mr. Choksi, try and understand beyond these earnings that I've asked you. Anything else within the earnings band that surprised you on the positive side, sir? Anything that clicked your attention?
Honestly, Sakshi, I think we take time to digest this entire earnings season. In a single day, 350, 400 companies, they come up with earnings. I don't know how sensible it is going to be to follow the Western model of asking every single company to report their earnings at the end of every quarter
Fair
and go
point.
crazy with this entire point. I think so. Maybe I think we take some time on this.
Fair point. So, what did you make of the new age tech companies like Eternal, Paytm? How did you look at those earnings? Many of them surprised on the positive side after the stock market's performance. Look at Paytm, a first time ever profit on net and operational side. Look at a Zomato where Blinkit's revenue and losses narrowed and revenue overtook food delivery business for Eternal. How are you looking at these new insights that are coming in, sir?
Well, on one side, as a consumer, I'm super excited with the kind of performance that these companies are producing. But as an investor, I think I feel that everything is in price. Today, if I have to look at sensibly, I feel that I think there is a chance for companies like Eternal to increase the prices. When on the other side, the GeoMart kind of format and quick commerce activity in it, I think they are taking up a big time shape. They are known for taking the leadership. This particular group is known for taking the leadership, and they take leadership by, I think, creating the pricing pressure in the environment. So, in my viewpoint, I would be very keenly watching how exactly the pricing pressure will work for both Eternal as well as CG, and see how exactly I think they manage to meet their higher amount of profit. As of now, as I see it, I think just because they are coming into the profit, both Paytm as well as Eternal, I think the market has given them a very handsome upside, which to me I think remains a question mark if it can remain sustainable. More than 3 lakh crore worth of market cap, and I think significantly large ask rate as far as I think the growth is concerned. Something which is not going to be easy affair for somebody to sustain. Let's wait and see. But no buying recommendation on them, even though momentum is very strong.
Okay, got that. Mr. Choksi, another aspect, that we want to discuss before beyond the earnings is the India-UK FTA that will be taking center stage today with Prime Minister Narendra Modi in London today. Of course, there are some indications that have already come in, but final agreement will be signed now. What is your overall understanding of, how is this going to change? I think the first major deal in a bilateral trade relation that we have also signed in the last 10 years with any country. Of course, all eyes will be on how will each of the sector get impacted with lower tariffs, which are the sectors that are going to gain, which are going to lose. But overall, what is going to be the large impact on the economy as well, sir?
So I think we will wait for the micro details to come up as far as the impact on the industry and the companies are concerned. But at the 40,000 feet level, I believe that I think the opportunity remains absolutely very, very strong. For the first time, the country is going to be experiencing a FTA environment, I think, which is more conducive to the growth of the exports in the country, and for which I think Indian industries I have geared up and are likely to gear up even big time on that. My take is that I think India is now at the threshold where probably I think we are going to see a larger part of the exports making becoming reality in next 5 years time, and FTAs are going to play a significantly large role in this entire era. I'm not completely worried about the other side of the activity, which is the flowing of imports into the country. In my viewpoint, I think as long as we provide the international standard products to the consumer at an affordable cost, I don't think that I think the premium products import into the country would dent the margin of any of the companies, be it in any sector. So wait and see. But overall, I think we remain distinctly positive about maybe some auto ancillary. I think to begin with, because over there we are seeing the green shoots. Over there we are seeing the immediate clarity as well at the same time.
Okay, got that. Of course, more details will flow in today, and this will be one of the development that we will be tracking very, very closely for all our viewers. And of course, we'll be tracking for you each of the sectors that are, in focus because of the tariff news and how are they reacting as well. Another key news point is with respect to IEX. That I wanted your view on again. Now, of course, we have been seeing this market coupling news come in, once in every few months, and the stock reacts either positively or negatively. In the pre-open today, again, there is a 10% downtick. Bernstein has already come out with a 35% downside expectation on IEX because of the market coupling news. Now, CERC has approved the implementation of market coupling norms with day-ahead market DAM in accordance with the power market regulations of 2021. Does it completely take away the moat that IEX used to have for a best price discovery as a platform? In what ways does it really impact IEX and the business that they are in? Is there a way out for them to continue to protect their market share in the same space, sir?
Yeah, certainly. I think one will have to see how exactly they re-emerge, I would say, and new craft, I think, a new business model if required in this kind of a challenging situation. As of now, it is difficult to say on rather answer every point question that you ask. But one thing remains certain that they are the leaders in the price discovery in the power segment market, and they continue to remain so. Now, how strategically they get aligned into the environment is something which we need to figure it out. But overall, I think if there is a ask, I think they will have to re-emerge, they have to reinvent some part of the business model.
Okay, got that. Let me just quickly reiterate for all our viewers how the pre-open trade has settled. The Nifty is higher by just 0.09 odd percent. You're looking at FMCG, PSU banks, financial services, pharma, metals as the sectors that are higher. Tata Consumer Products post earnings 2% up. Dr. Reddys also post earnings 1% higher. HDFC Bank is continuing to be in the uptrend. The JSW Steel, Tech Mahindra, Infosys also about 0.3% higher after the earnings in the pre-open trade as well. Let's discuss pharma space and Dr. Reddy, sir. How are you looking at that one? What indications will you draw from the earnings for the entire sector here, sir?
Single digit growth with a reasonably stable margin. I think that's a key takeaway as far as I think the result is concerned. And I think there is not going to be an immediate change in this environment, except the fact that I think the input cost will remain lower. So their promises to, I think, remain healthy as far as the margins are concerned for pharma companies. And that is what is I see as a positive thing. Of course, I think the threat of the tariffs and resultant impact thereafter is something which we are not factoring at this point of time because too early to even comment on this aspect. But
Okay.
overall, I believe that I think companies with the specialty generics, the companies with the contract research and manufacturing models, the companies with API model, they are relatively better off in the environment compared to pure play, low cost and big companies.
Okay. One more sector that I wanted your attention, sir, is on auto space. Of course, Tata Motors will again be in focus because of the India-UK deal. Maruti Suzuki has been up in an uptrend from the Japan tariff deal that they have signed with the US as well. Even beyond this, micro names, I mean, like, smaller names within the entire industry. SML Isuzu, about 150% kind of a surge in 1 month. What does that really indicate to you? The initial reaction was in fact negative when M&M talked about an acquisition, but right after that the stock has been only soaring higher, now at all-time high levels. Ola Electric finally moved up yesterday. A lot of EV related plays were also moving up yesterday, like Electra was coming back into fore. How are you looking at the auto space at large, sir?
I would like to think that Indian OEMs as well as automobile ancillary companies are the ones who are likely to get benefited maximum because of, I think, the tariff business and the free trade environment in which I think the agreements are being signed up. So, in my viewpoint, I think our Indian OEM companies would have, because their cost of producing compared to any other parts of the world has remained, I think, quite compelling and quite low. And given that kind of a situation, likes of Tata Motors, likes of Mahindra and Mahindra, Indian companies or even Maruti for that matter, we hold significantly large amount of prospects for exporting vehicles into other parts of the world, because over there the vehicle cost would remain significantly higher given the kind of tariffs levied on them. Whereas even if the Indian companies are levied with tariff, I think we are still comparatively lower and with the world class products which we have I think in the portfolio. So there is a reason to remain optimistic about the OEMs and the auto ancillaries along with, as far as I think the auto sector is concerned. That's where I alluded saying that I think I prefer at this point of time, the clarity point of view, auto and auto ancillary in the portfolio.
Okay, got that. Anything within the mid and small caps basket, Devin, sir, that you're looking at very closely at this point?
So we like the companies which are into the ecosystems where probably I think they are catering to the API businesses in the pharmaceutical companies which are catering to specialty chemical segments as well. Companies which are in the auto ancillary space, engineering R&D space, housing finance space. So that is where probably I think our larger inclination is. We believe that I think these are some of the areas where the respective companies are likely to play relatively better given the strong direction or the tailwind that they are getting. So I think one would like to stay invested into some of the sectors and the companies selling as far as investment portfolios is concerned.
Okay, got that. Well, thank you so much, Mr. Choksi, for being with us on the program today. As always, we love to hear all your insights on the markets, and this really deepens the insights for all our viewers also. So thank you so much for always helping us out with your broad understanding of the markets and the segments, sir.
Thank you. Thank
Thank you so much. All right, viewers, we'll start off with the market ticks. Now, 25,219. It's a flat start with the negative bias. It's in fact volatile right now. We'll see how it goes. But top movers on the Nifty are Tata Consumer Products, Dr. Reddys, Tata Motors. Remember, we were just discussing about it. Eternal also 306 continues to soar higher. Nifty Banks and Pharma. These are the pockets that are up. What's down? Hero Moto, Trent, Kotak Mahindra Bank, Ultratech Cement. These are the pockets that are down. Pharma index, of course, led by Dr. Reddy's, his half odd percent higher in trade. FMCG is higher on the back of Tata Consumer Products results. Metals, Auto, PSU banks, they're also soaring higher. But IT, 0.7% lower. Let's pull up Infosys, the key big stock that we are looking at after the earnings have come in for the IT major. 0.4% of a decline. 1567 after the earnings have come in. Remember, largely inline set of numbers that have come in. Guidance has also been raised in line with the expectations for Infosys as well. What we are also given to understand when it comes to Infosys is that the brokerage houses that have also come out with the reports is Morgan Stanley with an overweight rating of 1700, CLSA with an outperform rating at a target price of 1861, which both of the brokerage houses have mentioned that Q1 has actually ticked all the right boxes. Revenue growth is better than estimate, EBIT margins is better than estimate, FY26 revenue was in line with the guidance as well. So all the ticks were higher, but I think because of the movement of Infosys ahead of the earnings, there is some profit booking that is in shape. Let's also pull up the two other IT numbers that have come in, Persistent and Coforge, to see how those are also seeing a reaction. Now remember, for Persistent, Nomura came out with a neutral rating on the back of mixed results, target price of 5,510. Remember, Q1 they say was revenue was a mixed bag, deal wins were steady. Although the management has hinted at a slowing decision making process at the client's end, margins are steady. Helped by the ESOP charge that have been made, and that's something that for Persistent has come in. For Coforge also, if you look at the kind of numbers that have come in, will actually show you that there has been a decent performance this time around as well. Revenue uptick of 8.2%, and we've seen an EBIT improvement of 4%. Margins that have come in at 11.3% versus 11.8%. There was an estimate of a higher margin for Coforge, and that's why you do see some reaction on the negative side, that it's also come in lower vis-a-vis the previous 11.8% margin, and also lower than the expectation. Net profit, however, has improved by 22% to 317 odd crore rupees as well. So that's how the initial reaction is coming in. Let's get in our guest Mitesh Panchal joining in on the program with us to track the technicals and the overall market insights. Warm welcome to you, Mitesh ji. Good to have you with us. We'll start off with the IT earnings before coming to the markets. Infosys post earnings, Persistent and Coforge. How are you looking at all three?
Sakshi, good morning to you. Good morning to all our viewers. I think the frontline IT stocks are here to stay for a longer period of time in consolidation zone, but this is exactly the time when one should buy in. So, as a disclaimer, we have recommended Infosys, TCS, and Wipro as a buy call technically, and we are of the view that going forward, probably the trend will play out. So, our clients might have direct and indirect position in the stocks. So, coming back to the entire sector and the stocks, I think yes, as of now, it looks like that probably there is no steam in the sector, and the stocks are not, giving us a fillip, which is much needed. But we are of the view that we are spending quality time in consolidation, and going forward, I think IT will outperform in the next 6 to 8 months. So with that view, technically, we have recommended TCS, Infosys, and Wipro.
Okay, got that. On the markets, 25,200 is now with us. Do you think this will be protected, or is there still a sign of volatility? Because it's the expiry session as well. How do you expect the markets to trade today?
Yeah, so as far as today is concerned, I think we are in the broad range, 25,000 on the downside, 25,500 on the upside. But if we look at bit of a longer term horizon, Sakshi, I think 24,800 is a base now. I don't think so in under any circumstances we will violate 24,800 on the downside on the closing basis. And as far as the upside is concerned, I think 25,500 is a pretty strong resistance. So I think we are in a broad range, 24,800 on the downside, 25,500 on the upside. Once 25,500 is taken out on the upside, probably we may see a trend playing out. So till that, we need to be very selective and stock specific. But so far, so good. We are of the view that bottom is in the place. So we are not seeing any declining below 24,800.
Okay, got that. So that's the market for you. But let's talk about the Nifty Bank as well. Mitesh ji, HDFC Bank, ICICI Bank both hit record highs in yesterday's trading session. So far in the recovery, both of these stocks have played a very important role. Earnings have also come in, and beyond this, the entire uptick started. What will you expect now beyond the all-time highs? Do you think a fresh wave of momentum has begun? Will they get into a new trajectory of re-rating, or do you think enough is done for now?
Yes, so what you have advocated is right. A new beginning has started. A re-rating will also take place. And Sakshi, generally when such banks hits an all-time high, probably we may think that it's a time for a profit booking, or probably the trend will pause. But we are of the view that the trend has just started. So both in ICICI Bank and HDFC Bank going forward, including I would like to say Kotak, we may see a persistent upside, a very strong upside going forward, and probably we may see at least 8 to 10% upside in next 9 to 10 months. And both the stocks, all the three stocks, HDFC Bank, ICICI Bank, and Kotak Bank will surprise. And this will help Bank Nifty to test around 59,000, 60,000 levels going forward. Now, since last 2 days, somehow the interest is coming back in the PSU Bank as well. So we have seen a good bit of an upside mild upside on the hourly chart as far as State Bank of India is concerned, PNB is concerned, and probably maybe going forward, PSU Bank may join the rally. But so far, so good. Both ICICI Bank and HDFC Bank, including Kotak, is a buy even at this point of time.
Okay, got that. And if I ask you a difficult question between HDFC and ICICI, if one has to choose, how will you choose then?
Okay, so whenever you come across any two choices, the rule is simple. Divide your capital, put it 50-50.
Perfect.
Right.
That's a
Right.
great
So that is the
answer.
way how you should work. So there is nothing like only one stock or there is only, I mean, this goes hand in hand with also investment in silver and gold. People are massively bullish about silver. They have
Yes.
given a lot of weighted to the silver. And what has happened? Gold has given phenomenal return as compared to silver. So whenever you, in stock market or investment, you come across two choices or three choices, always divide the capital equally and approach the market or the asset class like this only. This is simple, boring, but over a long period of time, it will pay off.
Okay, got that. I hope this has also helped all our viewers understand key aspect there. I'll talk to our viewers, about the top moving stock on the Nifty, Dr. Reddys. That's the one that's reacting positively, now almost 3% higher at 1283. This is right after the earnings have also come in for the company. And let me reiterate for all our viewers, on a consolidated year-on-year basis, the revenue for the company has improved by 11.4%. It has now come in at 8,572 crores. EBITDA has improved by 2%. Margins have come in at 25.4%. Remember, this has dropped from 27.7% earlier. And even the net profit is up by about 1.8% at 1418 odd crore rupees. What we've seen is North America has actually climbed down for the company, 11% year on year, 4% sequentially. Europe, however, is up 142% year on year, flat sequentially. India revenues have come in at 1472 odd crore rupees. That's how Dr. Reddy's earnings stand. Your reaction post the earnings and the move that we are seeing, Mitesh ji?
I think it's a sustainable move going forward because if you look at the chart pattern, Sakshi, on the daily chart, stock has formed an intermediate high on 30th of June 2025 at 1305, 1305. After that, stock has made a steep decline and recently, before a day or so, has made a bottom between the range of 1280 to 1300. So we are of the view that going forward, probably the stock will enter into a new trading range and reclaim its old levels, that is around that is around 1379, which it is formed on 12th of June 2025. So I think, yeah, the move needs to be bought into. One can go long in Dr. Reddy as of now with a stop of 1231, 1231 for the potential target of 1380.
Okay, fair point. I hope this has also helped you out. Within the pharma pack, is there any other stock also that's taking your attention, Mitesh ji?
Glenmark Pharma, undoubtedly. I think if you look at the entire chart pattern of Glenmark, I mean, very slow mover, and is in last 2 months or so, stock has phenomenally gained. I think from a level of 1457, which is a close in the month of May, from 1457, the stock is now trading at 2138. Since last 2 to 3 trading sessions, yes, there is a profit booking which may continue going forward, but I think any weakness in Glenmark Pharma should be bought into.
Okay, got that. Let me just quickly look at some of the other spaces as well. In the F&O space also, we are seeing some healthcare pack stocks. Max Healthcare, Fortis Healthcare, both of them are taking higher. Biocon is also up and about in trade. Anything within the F&O pack, Mitesh ji, from the healthcare space that is looking at positive right now?
I think two stocks. First is Apollo Hospital. That is looking really promising. Even I think we have mentioned it earlier also that the stock is now heading for a five-digit mark. That is 10,000 going forward. That is what is our target is. So recently, if you look at the Apollo Hospital, the stock has given a correction from after making high at 7,625. Since last 2 trading sessions, there is an attraction both on daily and hourly chart. So we are of the view that it's a trend reversal, and going forward with this trend reversal, we may see stock not only testing its recent high of 7635, but also entered into a new trend range, and probably the target of 8,000 is nearby. So I think Apollo Hospitals is what we are looking at. Second is Zydus Life. I think at 957 the stock is trading. Above 940, it's a clear-cut breakout on daily and weekly chart, and we are of the view that now stock will enter into a new trading range between 1050 to 1100. So even Zydus Life is also a buy call with a stop of 900 for the potential target of 1050, 1100.
Okay, got that. That is the key view that's coming in. Let me also just ask you on the auto pack now. Tata Motors, let's start off with that. 701 coming in for Tata Motors. The India UK FTA deal is in focus today, Mitesh ji. What kind of agreement will be signed? What will actually come out will, of course, be in our focus, and we will be tracking that very, very closely. But, with the Tata Motors actively playing in that aspect with JLR, how are you looking at what kind of opportunities could present themselves? Tata Motors has been a very slow mover, a consolidative stock for the entire last 8-10 months odd. Will this change the game for Tata Motors?
I don't know fundamentally what will change the game, Sakshi, but technically I'm sure that unless and until if we do not cross 745 on a weekly basis on the closing basis, we will not be able to see any attraction going forward. So once the stock close above 745 on a weekly basis, that is, I need a Friday close above 745 in a spot segment, that is cash segment, then it is a good to go with a stop of 710 for the potential target of 850, 900. So I don't think so unless and until if the stock is not crossing 745, we may see a bit of a bounce, but not a sustainable trend reversal. For sustainable trend reversal, 745 is the number which we should watch.
Okay, fair point. I hope this has also helped you out. Let's look at some of the other pockets. Okay, I think the EMS related stocks are also on the buzz yet again. Dixon Tech, PG Electro Plus, both are buzzing in the F&O action today. Mitesh ji, how are you looking at both these now?
Okay, so I think as far as the space is concerned, looking pretty interesting right now. And if you look at the chart pattern, probably the higher end of the range, weekly and monthly, that is giving a comfort. So yeah, as of now, we may take a buy call, but I think if you look at the other sectors that are looking much more promising, let me put a sector in front of you, that is fertilizer. So now Chambal is coming back. I think Coromandel is also coming back. So I think these sectors probably are giving more comfort as compared to the sector which you have discussed. So probably we will go for a Chambal fertilizer or probably good sugar stock. Like if you look at the entire run of EID Parry, I mean, completely phenomenal and amazing. So I think these kind of sectors, as we have discussed earlier also, Sakshi, that commodity is giving a lot of comfort for the year 2025.
Okay, got that. I hope this has also got you an understanding of the same. Let's me look at some of the other stories. Metals, I think that's also buzzing. Half odd percent higher in trade for the metals pack. Mitesh ji, any thought here on the metal story? What are you looking at? Any key stocks that come right on top of your radar?
Yeah, two stocks actually, and you have picked up the right sector. I think metal is also slowly and gradually forming its base. So Tata Steel is looking pretty interesting as of now, and second is Hindalco. So both the stocks are looking pretty interesting from the viewpoint of short to medium term. So let's discuss about Tata Steel. If you look at the chart pattern, recently it has hit a high of 168.78, and then we see a bit of a mild correction, and then it has come back. So going forward, I think Tata Steel will enter into a new trading range between 180 to 200. So with a stop of 150, one can go long at the current level for the potential target of 180 to 200. As far as Hindalco is concerned, we have seen a good bounce from the lower level of 670, and it is forming heart of hard bottom formation on daily chart as well. So Hindalco is also looking promising at 695 yesterday's close. Probably what we are looking at is 750 plus target. So with a stop of 680, one can go long also in Hindalco for the potential target of 750 to 800. So as far as Tata Steel is concerned, yeah, around 180, 200 is what we are looking at. As far as Hindalco is concerned, 750 to 800 is what we are looking at.
Okay, got that. That's the metal story. Let's come to FMCG, sir. And although the index is just mildly higher, what got my attention is Tata Consumer Products post earnings 1.5% higher, 1077. And in the last couple of days, the momentum that we are seeing across the board as well. Is it still a slow mover? Will it continue to also move in a small range, with no exciting moves? Or do you think this is just giving the right opportunity for investors to accumulate the right kind of stocks from FMCG for the next rally to begin?
No, I think it's too far away. I think
Okay.
let's right now allow the stocks to consolidate and then probably give us a good breakout. So as far as FMCG is concerned, again, it's a boring story, and probably going forward it will spend a lot of time in the consolidation. So not in a hurry. Take an example, Nifty FMCG index above 58,000 only. We can say that it's a serious trend reversal. Till that, whatever rally comes in, if you want to exit, you can exit and deploy your capital for a short period of time in other sectors where you can make probably or generate good alpha. But as far as FMCG is concerned, it's a slow mover. Probably see in the next 6 to 9 months, Sakshi, we may see a good consolidation, and then only we'll see a breakout. So it's a long story. So for the 6 to 9 months, advisable to shift your capital from FMCG to any other basket like in the commodities. You can go for metal, or you can go for sugar, or you can go for fertilizer as well.
Okay, got that. Shift your money out from FMCG to other pockets that may actually give you better opportunities to track the momentum. Within the auto space, I forgot to ask you, I was just checking the Nifty 500 names with HD, and a lot of stocks were buzzing here. Force Motors caught my attention, 11% higher now. And look at the stock, it's upwards of 19,075 odd levels. This stock is now in a very, very, optically expensive zone, 19,100, looking at it, a lot of people will think this is out of my reach to invest in Force Motors. The earnings have come in, and that's the reaction that the company has got. Let me just reiterate. Revenue uptick of 21.9%, 2,297 crores of revenues. EBITDA up 33%, operational profits improving, 332 odd crore rupees. Margins higher, 14.5% versus 13.2%. Net profit 52% higher at 176 odd crore rupees. Clear uptick across all baskets of the kind of traction that we look at, or the parameters that we look at in the fundamentals. How would you look at Force Motors? It is only climbing even as we speak, now at 19,150, a 50 rupee jump in just last 1 minute.
Yeah, so Sakshi, if I tell you the phenomenal run, in the February the stock has closed at 6671, and today what we're talking about is at 18,000, right? 19,292, 12% up. So probably we have made 3 times money in just 5 months. Okay, and in the beginning you're talking about SML issues as well. The stock has doubled in just 1 month. So I think few pockets from the auto has really surprised the street. And now I think Force Motor at 12.89%, 19,350 is out of reach for many people. But believe me, in these kind of stocks, the trend will continue going forward. So SML Isuzu as well as Force Motor continue to climb going forward. So do you want to put your money as of now? The answer is yes, but only to the tune of 20 to 25%. Because in a low liquid market, when few stocks shoots up, or when few sectors shoots up, basically they will see a significant upside. So going forward, there is no surprise even if Force Motor trades at 24,000, 25,000.
Okay, got that. Let me read a few names other than the ones that we've discussed within the broader markets that are hovering higher. Thyrocare Technologies, again, I think earnings momentum 6% higher on this one. There's also Pondy Oxides and Chemicals that's higher in trade. We also could look at A to Z Infra, that's also higher. From the small hotels, it's Blue Coast Hotels that's higher, Reliance Home Finance, few names, not many names that we can really point out. But IEX is down 10%. in trade within the broadest index. That's what is coming under pressure. Miteshji, how are you reading IEX? Again, the market coupling news has come in, and whenever we've seen a news come in, it's always negative for IEX. Now, finally, some approvals coming in. Looks like, market coupling will be the way forward from here. What is at risk is the moat with which IEX had been operating to give a platform for the best price discovery. That has been working well for IEX. But now with a market coupler that will collect all the prices and showcase the best price on their exchange, will the moat completely go away? What about those investors that had been having this stock in their portfolio from a long time? They have also celebrated a lot of great periods of time when IEX has given them great returns. But what next? What is the future?
Okay, so what next is pretty clear. When a platform company gets hits, it continue to get hits badly. So we are of the view that now the stock is going forward, the stock will attract sell on rise strategy. So if you are at loss, advisable to book the loss and get into some other counters. If you want to similarly go into any other counters, I think BSE is a preferred bet. So I think here is a clean sweep which is available. You can sell IEX and go long into the BSE. So I think if I have the stock, I will definitely sell and buy BSE. I would like to swap the stocks because I don't think so going forward IEX will come back. Probably it will attract more and more selling pressure going forward. What I see technically is that stock will head towards its recent low of 116, which it has hit in the month of June 2023. So 116 is what I'm looking at, which is far away from the current level. So advisable to book the loss, exit, and switch to a stock like BSE.
Okay, got that. Since you're talking about the capital markets related stocks, Miteshji, how would you look at CDSL? NSDL IPO could be coming in soon. The RHP has been filed. We're looking at a price band as early as tomorrow that probably could be seen. How would you look at CDSL ahead of the big competitor NSDL IPO also hitting the street now?
Yeah, so I think CDSL continue to outperform Sakshi going forward. It's only because of the fact that if you look at the recent fall, it was brutal. From the level of 1989 in the month of December, the stock has made a low to 1070. So I think there is a 50% correction from the top. And what? Yes, it has recovered 60 to 70% of its loss. So I am of the view that yes, CDSL should and must be looked at it from the viewpoint of only short term. So as of now, at the current level, should I go long? The answer is yes. At 1700, I will definitely go long with a stop of 1600, 1600 for the potential target of 1800 and 1900. So yes, it's a good a carry trade at least for the next 1 to 3 months.
Okay, all right, Miteshji, we will thank you then on that note for being with us on the program and helping us with your insights across the broad spectrum of stocks and sectors that we've discussed with you. Always a pleasure. Thank you so much.
Thank you.
All right, viewers, we'll start wrapping up the morning edition of Market Today. And, you can look at a 33 point of a downtick right now. So we've dwindled lower after the first 25 minutes of a trade has panned out. Let's see how this goes forward. Remember, it's the weekly options expiry, so volatility cannot be ruled out. At this point in time, if we look at the kind of market momentum that we are seeing, we only have pharma, auto, metals and infra stocks higher, but IT is completely dragging 1% lower, and that's creating some, kind of a downward momentum for the markets. But let's see how it really pans out. Earnings conversations following for you, and of course 12 noon will be daily calls, so stay tuned for that too.
Across the globe, the United States continues to work with parties to disputes